Let me explain this to you guys. This is very powerful. What's a market pause and what's a market turn? Do you know that there's a huge difference between a pause and a turn? And you have to be able to know the difference. How can you ever be successful if you don't know what a pause or a brief interrupt in the flow of a move is versus, is this a turn of direction entirely? Because there's similarities between the pause and the turn. And you've got to be able to know. So knowing the difference between pauses and turns, that is paramount. If you know how to determine what a pause is, then you automatically know what is likely to happen next after the pause. And now it's about, let's take advantage of what's going to happen next 8, 9 times out of every 10. Step number 1, guys, understanding the 3 different types of market moves. Now, before we get into the specific legs of a market, I have to define for you what is a move. There are 3 specific types of moves. These are the 3 types of bull market moves. The period of the bar doesn't really matter. So if you're a 5-minute chart trader, this is a 5-minute bar. If you're a 2-minute chart trader, this is a 2-minute bar. If you're a daily chart trader, this is a 1 full day bar. Time doesn't matter. Everything that I talk about is universal across all time periods, okay? The first type of bull market move is a violent, powerful, sudden, unmistakable surge to the upside in the form of 1 bar. Type number 2 is 2 powerful bars, not as elongated as type 1, but very powerful. Individual bars are powerful, but when you take them together, they're just as powerful as type 1. Now, type 3 is similar to type 2 in that it's not just 1 bar, but it's multiple bars. Now, it's not a specific number. Type 3 is not a specific number. Type 2 is. Type 2 is specifically 2 bars. If it's 5 strong bars, it's type 3. If it's 8 strong bars, it's type 3. Do you understand? Anything beyond 2 is type 3. But type 1 is 1 bar. Type 2 is 2 bars. They're strict in terms of the number. And type 3 is any solid move where the vast majority of your bars are the same color and they're solid. It's not that you can't get a pause bar or a neutral bar in between. You just don't want a lot of them. So what makes a bull move is that it's fluid. What you see across all 3 of these types, guys, is a solidity in the color of the bar. Type 1 is a very solid green bar. Type 2 is 2 solid green bars. Type 3 is a barrage of solid green bars. Those green bars might be shorter, but they're still solid. There's nothing shaky about them. There's nothing unmistakable about them. There's nothing kind of wishy-washy about them. They're solid, powerful bars, the majority of the bars that make up type 3. Of course, this is the reverse. This is the 3 types of bear moves. So when I say look for a market move, you're looking for a market or a stock or a financial item that is producing either one of these 3 moves: a single powerful bar to the downside, a 2 bar power move to the downside, or a multiple bar move to the downside. The market can only produce a move in one of these 3 ways to the upside, and a market can only produce a move in one of 3 ways to the downside. This is building block number 1. It's very important that we understand this. There's only 3 moves the market can make. Now, step 2, there are 3 types of market pauses. Just like there are 3 moves, there are 3 types of pauses, and here's how they work. Remember, guys, the move up can be any one of these 3: 1 bar move up, 2 bar move up, or multiple bar move up. The first type of pause is usually a pullback. a retracement, a giving back of a portion of the move up. All right, that's pause number one. Pause type number two is not a give back of price. It is a marking of time pause. You see, pause number one gave back price. That is a price-oriented pause. You're sacrificing gain to the upside to give the stock a chance to rest. The rest for the stock or the financial item is occurring because the stock is backtracking. In pause number two, your stock or financial item is not giving back price. It's marking time. Type 3 is just a brief pause. It is not as elongated in time as type 1 or type 2. It's literally like a hiccup of a pause, almost as if your runner temporarily bumped into someone by mistake. That bumping into someone caused them to hiccup, hesitate, break their stride a little bit, boom, but they're off in the same stride relatively quickly. The bump into someone that was walking slow in front of them interrupted the flow a little bit, but didn't stop the movement, the subsequent movement to the upside. And so these are your three different types of pauses. Now, the market moved down. Now, remember, that market move down can be any of the three types of down moves. It can be 1 bar down, it can be 2 bars down, or it can be a barrage of bars down. Remember, move is one of the three types. All right, doesn't matter which one. So after a move down, a pause one is a give back of price, remember? So we retrace a portion of that downward move, a brief move to the upside. And pause number two does not give back price, but it marks time. And pause number three is very brief, a hiccup. Boom! Broke my stride a little bit, but not for long. Boom! Got my rest. Now I'm off and running to the races again. Boom! Had to jump over a little small wall, so had to back up, and now I'm off to the races again to the downside. These are your three types of pauses. Step 3, knowing the importance of the numbers 3 and 5. One of the most frequently asked questions I get on the technical side is, do I have a belief or faith or use in my trading Fibonacci concepts? All right, now, and the answer is yes and no. I believe in the efficacy of Fibonacci. I believe that it is a force in the universe that is very real. And remember when I told you that the markets are a microcosmic version of the universe of life. And so whatever's true for life or the universe has to be true for the market because it's a mirror image, albeit a smaller mirror image of the more cosmic universe or life. That is my philosophy. As above, so below, as below, so above. And so if Fibonacci, if we can find some measure of truth in Fibonacci in the universe and in the various sciences that are designed to basically study life in the universe, then of course it has to be true in the market. So yes, Fibonacci has been proven statistically and scientifically to be true in the universe, in life, in the world. We see Fibonacci increments and cycles in seashells and plants and planetary alignments and stars and da. I believe that there are many traders who take Fibonacci too far. They take it to the extreme. And just like anything else in life, you can take something so far that it starts to lose its importance. Now, what I'm about to explain to you is rooted in the concept of Fibonacci. There is something magical about the numbers 3 and 5 in the markets. What you're going to find and what I'm going to reveal to you is that markets will have a high tendency to turn around 3 or 5 cycles, or somewhere in between. This number 3 and this number 5, and in the middle, which obviously we would say with 4, all right, 3, 4, 5, that zone is a very important market zone. In fact, I can say that that market zone 3 to 5 is responsible for my whole trading profitability. That everything I do is usually in between or at or in between those two numbers, 3 and 5. I'm doing something after 3. I'm doing something after 5. I'm doing something in between them. And I know that my timing is going to be better if I'm doing something around 3, 4, or 5, 3 to 5 in that zone. All right. And so what I'm about to explain to you is the basis of it is Fibonacci, because obviously we know that the number 3 and the number 5 are Fibonacci numbers. The number 1 and the number 2 are Fibonacci numbers as well. But 1 and 2 become important with different concepts. The concept that I'm explaining to you today has its importance rooted in the numbers 3 and 5. So just wanted to give you a little background behind these two numbers here. Let's get on with it, guys. Markets tend to turn, or have a tendency to turn, after it's done something 3 times in a row. And if it continues, it has an even more powerful tendency to change after it's done something 5 times in a row. So 3 is the first stop, 5 is the second stop. Let me show you what I'm talking about. Remember, I told you that there are 3 ways a market can pause. So check this out. Here's market move number 1. Here's pause number 1. This is one move, interrupted by a pause. Boom! Here's move number 2, interrupted by another pause. Remember these 2 pauses. And boom! Here's move 3 that is more likely now to have some type of change. Why? 3 legs have been achieved. And this is what we're talking about today. How to read the market's legs, the market's beautiful legs. All right. And if you traders can count to 3, you're going to be okay. And for you advanced types, if you can get all the way to counting to 5, you're even going to be better. All right. So many people ask me, Oliver, do you think that it's possible for anyone to really learn how to trade? And says, well, can you count to 3? You say, well, yeah, of course. Well, then I think yes. But can you count to 5? Well, yes, of course I can. Then you're going to really be okay. All right. Because 3 would capture about, guys, 70%. 70% of your turns, your changes in trend, your changes in the nature of the stock, in the nature of the move, in the nature of the momentum, in the nature of whatever the stock is doing, 70% change after 3 legs. Let's look at 3 legs on the downside. All right, I'm going to do it with the red, right? So you got move 1, pause 1, move 2, pause 2. Remember the 3 types of pauses. Boom! Move 3. So do you see the 3 legs? Do you see the 3 legs? Beautiful 3 legs. The market's not a 2-leg animal. It's a 3-leg animal sometimes. Sometimes it produces a 4-leg animal. Sometimes it produces a 5-leg animal. But most of the animals that the market produces have 3 legs, 4 legs, or 5 legs. 3 legs up to 5 legs. Typically, 70% of the time, your turn's gonna happen in some way, or your change some way happens after the 3rd leg. So just knowing how to read legs and pauses and being able to count to 3 to 5 can have you playing this concept like a freaking pro. Do you understand? You can have one type of pause. Boom, pause, boom, pause, boom. So you got leg 1, leg 2, leg 3. and the pauses are identical. But you can have the pullback pause, boom, the sideways pause, boom, or you can have this, boom. And so each one of these are 3-leg moves. 1, 2, 3. 1, 2. Do you see it? Don't get tricked by that brief one. 3. And these are all 3-leg pause. Now, it's not necessary for me to demonstrate for you a 4 pause or a 5 pause. It's just another pause after 3 and a continuation. It's just that I want you to understand that 70% of your changes come after the number 3. So only 30% come after the number 4 or 5. So understand that most things can't get past 3 legs. They can, but most things can't get past 3 legs. That's the most important thing I think you should understand here. Look at the relatively fluid move to the downside and look at, I know it's not perfect. In real life, it's not going to be perfect, guys, but this is the relative pause. Now, your pauses in real life, they're not always like a drawing, right? Not going to be like, oh, Oliver, that didn't happen at a right angle. That's not a pause. That happened a little slanted to the downside there. That doesn't count, Oliver. We can't be that specific, freaking strict, right? Your pauses sometimes are going to be pauses like that with a slight upward bent. Sometimes the pause is going to be a little like that, slight tent, and sometimes it's going to be perfectly flat. We've got this drop basically and this pause of sorts here. All right. Now, leg 1. Fluid, unmistakable move number 2. Pause 3. Pause 2. Right? So we got leg 1 and 2, pause 1 and 2. Leg 3 and pause number 3. Now remember what I told you. 70% change in some form or another after how many legs? Let's see, boys and girls. 1, 2, 3. Is it possible for a 4th leg? Of course. Are the odds that we are at or near the bottom? Are the odds higher than not? Yes. Isn't 70% higher than not? Doesn't make another leg down impossible. All I'm explaining to you based on this concept is that we've got a 70% chance that this is the bottom. Being able to count to 3 to 5 and being able to read the legs and being able to determine whether something's a pause versus a turn is so paramount to proper market play. You've got to get this under your belt, and it has to become almost second nature for you. You should be able to look at a chart. Ultimately, you should be able to look at something and say, okay, it's on its 3rd leg. I've got distance far away. My 2 moving averages are wide apart. And I've got time. That's another concept we will cover. So I've got 3 legs down. I've got wide space from where the 20 is and the 200 is. And I've been going down over time. Wow. All of these things are lining up to say we're likely the bottom. Anyone who tells you, traders, that it is possible to be certain without any shadow of a doubt, do you understand? Anyone who tells you that is either being intellectually dishonest or they're an idiot. There's nothing in between that. You can't know something 100%. This is not a game of certainty. This is a game of probabilities. And this is one of the things that makes this art, if you will, for lack of a better term, this art we call trading, so difficult for people because the vast majority of people are out here in the markets searching for certainty, and it doesn't exist. They're searching for the Holy Grail, and it doesn't exist. They're searching for something that can give them absolute assurance. And they fail to understand that this is not a game of absolute assurances. That it doesn't matter how long you study, how long you read, how long you practice trading, you can't ever be certain. And many people have a problem with this. Yet they understand in regular life that nothing is certain. But somehow when it comes to the market, they can't understand it. Like, for instance, we don't ever really truly have certainty if it's going to rain 2 days from now. We might get a weather report that says it's going to rain, but we can't be certain. But we can come up with probabilities. All right? I'm in the midst of a freaking rainstorm right now that is projected to last for the next 6 days. So yeah, 2 days from now, it's high probability it's going to be raining. That is not certain, but it's pretty freaking high. We live our everyday lives with uncertainty. We live the life of playing probabilities. All right? It's everywhere in our lives, but somehow this level of understanding, this intuitive intelligence is lost when it comes to trading, as if it's possible to know. You can't. And so we can't ever know if 3 legs down is the end, but we can know that it is highly likely. We can't know for sure if there's another leg after 2, but it's probable if certain things are in place. And so I always want to remind you of this, because I don't want you to take what I teach you and think that it is going to lead to absolute certainty. No, this is why you're going to have to become an expert at managing the scenarios that don't work out according to plan, so that those that work out according to plan can reward over and beyond you protecting yourself for the few that don't. As long as we can keep the few that don't work according to plan contained, we can let those that do work flourish in a far more marvelous, spectacular way than the ones that don't. Before I close, I want to show you another time frame. We looked at the daily chart of Bitcoin. We're going to look at the weekly chart of Bitcoin. And we're going to take the ultimate high price of 69. That's where Bitcoin topped out in November of 2021. It's a few months ago. All right. Now, let's take the bigger time frame and count the legs. 1, 2, 3. I don't know if you see it. 4. So we got 1, 2, 3, 4 on the weekly. Now, you might feel like, Oliver, I didn't see this pause and I didn't see this one. Here's something interesting. I like When I'm looking especially at macro phases, I like to see 5 bars create a pause, right? When I'm looking at a bigger time frame like this. So count the bars. Look, let me open this up a little bit so you can see it a little clearly. Count the bars. 1. What bars are part of the pause? 1. I know it started here, but this is part of the pause. This starts at 1, 2, 3, 4, 5. Pause. All right. Here, this starts the pause. 1, 2, 3, 4. It's way more than 5. Remember I said that they're not always perfectly sideways. All right. And 1. Well, let's do that. I'm sorry. 1, 2, 3, 4. Boom. 5. 1, 2, 3, 4. Let's see. But I believe there's good odds that we've got it. Not that this means this is going to turn around and go immediately to all-time new highs or anything like that. I'm just saying that we're closer to the bottom than we are to the top of this thing. We're closer to the bottom than we are to the top of this life-changing thing right here. And remember, in one of my prior talks, I told you my bands were going to get it. Did I tell you? Did I tell you my bands? Oliver Velez's band. Did I tell you it was going to get it? Did I tell you? Do you see what's happening now? Remember that? Remember my friend? All right. These bands are catching again. Let's see. All right, guys. There you have it.